The historic American Motors Company, General Motors, has made news headlines today, sending their stock price skyrocketing. In today's video, we'll be telling you the 3 reasons why you will now want to consider adding GM stock to your portfolio. So let's get the show started. Hello everyone, this is Mark with MC Stocks, where we go over the basics of the stock market, investing, and bring you the latest news on trending stocks. Remember to subscribe and hit the like button for more videos like this one. And as always, remember to do your own due diligence when investing and seek a financial advisor for professional advice. General Motors is an American classic car manufacturing company, responsible for producing some of the first vehicles to hit the road to the car brands we still recognize today, such as Chevrolet, Cadillac, GMC, and Buick. Over its time in the stock market, the company has had a relatively flat stock price, typically hovering between the $30 to $40 price range. Without much price action in its history, the stock would typically be held in long-term retirement accounts that just follow the S&P 500. However, with the recent news released today, this stock has now become a hot commodity on Wall Street. So let's dive in with the first reason why you should consider buying some GM shares for yourself. The huge news released today is that tech giant Microsoft has partnered with General Motors for creating self-driving technology. Microsoft is joining General Motors' self-driving vehicle startup called Cruise through a $2 billion investment and partnership, where they will be providing their expertise in software, cloud computing, and AI tech. This now puts Cruise at an estimated value of $30 billion. Cruise produces self-driving, driverless vehicles designed to drive around within cities. The uses of this type of vehicle is very expansive, from ride-hailing services to last-mile deliveries. They so far have been testing their self-driving technology within the streets of San Francisco. Now, with the Microsoft partnership, we can expect an acceleration of technology development and car commercialization. This partnership announcement is painting a bright electric future for GM. GM Chief Executive Mary Barra says that having Microsoft on the team is a great addition as they strive towards the goals of zero crashes, zero emissions, and zero congestion. This sounds like the transportation world we would like to live in, and it looks like Wall Street agrees as well. After the announcement, we saw GM stock jump almost 10% today during market hours and an extra 1% in the after hours. Investors are seeing this new partnership as the catalyst needed to put GM in a competitive stance against the booming EV market. Furthermore, with GM now posing more of a threat to smaller, newer EV startups, investors may not be so quick to pick up positions in the unproven businesses. With all of this positive sentiment growing around GM becoming a stronger EV competitor, similar stock price surges seen in EV stocks in 2020 may be coming to GM stock. This volatility will be great for short-term trades, but this partnership with Microsoft alone has strengthened General Motors' long-term outlook. But if the Cruise partnership is not enough to convince you, we'll take a look at the second reason why you should consider buying GM stock. Although the news about the GM Cruise partnership is fantastic news for the company, and evidently the tipping point for EV enthusiasts to buy GM, Cruise is not their only EV investment. Not too long ago, GM released their grand announcement showcasing their new Hummer EV. The announcement was groundbreaking, with a box office-like commercial, phenomenal vehicle features, and, most importantly, the revelation that GM is now also committing to an EV lineup. GM, a giant American car manufacturer, has the potential to overshadow the newer startups that are just getting into the market. With the return of what once was the gas-guzzling Hummer to a newer EV version, we are seeing a glimpse of what GM will be capable of. A position in GM could now also be considered an investment into the electric vehicle sector, especially as the company continues to push towards that direction. If you're looking for a brokerage to add your GM positions to, be sure to use our referral links in the description below. M1 Finance is doing a great offer currently where you can get a free $30 using our referral link. So use the link below, earn an easy $30, and don't miss out. So, we have now explained how GM has made clear that they are an EV force to be reckoned with. But for our third reason to own GM stock, let's take a look at what GM stock has to offer you. Prior to the pandemic, GM stock paid out 38 cents in dividends to their shareholders on a quarterly basis. This means that at its current trading price of about $55.50, you would receive a very healthy 2.77% dividend yield. However, we may not see these dividends until the pandemic has subsided. It is not uncommon, however, to see companies pay out a catch-up dividend to make up for the period of time where investors did not receive their usual dividend payout. So, if GM decides to reinstate their dividend, their current shareholders may be surprised with a nice increased payout. For new investors coming in, it will be more reason to hold onto your shares to receive the extra source of passive income. With potential growth in the EV market, it would not be too far-fetched to speculate that dividend rates could follow an increasing trend over the years if GM decides to reinstate it. GM is bound to make an impact on the EV sector with their new partnership with Microsoft, the commercialization of Cruise, and the eventual release of the Hummer EV. This reinvigoration of the stock has gotten Wall Street's interest and should lead you to consider if you should own some of your own shares. Stay tuned here at MC Stocks for any future developments on GM's EV drive. Thank you for watching today's video. Don't forget to subscribe and hit the notification bell to get notified when we release our next video. Please like and share for more videos similar to this one, and comment below with any questions that you may have so that we can address them in future videos. Thanks.